Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Thursday the 17th of October 2013. Well, what a day it has been. This is a US debt ceiling special because they did reach an agreement. Washington did raise the debt ceiling, which was announced, or there was a prospect of a deal late afternoon London time yesterday, and that caused equities to really bounce higher. We saw a massive relief rally in the equity market. However, today things are slightly more muted because, of course, the debt ceiling has only been raised until February 7th next year, with the government fully funded until. We'll be back in this same situation where political standoff. One thing to note, 144 Republicans voted against the deal that would have avoided a default. So even though the default was avoided because the bill did pass, that's a serious chunk of hardline Republicans who are really against against any type of long-term deal to get rid of this debt ceiling problem for a sustainable amount of time. Rather, they are really seeing this as a bit of a battle rather than a political negotiation. And they really lost a lot, of course. There's still ongoing discussions about essentially about Obamacare, which is what this mostly was. But at the moment, it looks like there could be a bit of a hard line back in February, when we reach the next debt ceiling. Of course, there will be extraordinary measures that the Treasury could use, so we may not get to a debt ceiling debate until mid-April. And by then, the one positive I would take from this is that by April, we're only a few months away from the November 2014 midterm congressional elections. So the next time there's debt ceiling wrangle, there could be real political capital at risk. And we do know that from a political standpoint, the Republicans have really been blamed for what's happened. The polls have gone against them. So they may not want to risk the same type of thing and huge losses in the congressional midterms in spring 2014. So what does this all mean for markets? Well, interestingly, as I said, let's take a look at that S&P 500. As you can see, it had a fantastic rally yesterday. Now, it did stall just ahead of that all-time high at just around 1730. However, and we have seen European stocks open lower today. However, at the end of the day, we still don't have any economic data. This still, even with this, just this short-term deal, does make Fed tapering very likely that we will see this short-term deal makes Fed tapering likely to be pushed out. Some people are now saying to June 2014. Can you believe that? But essentially that means that there's liquidity around, and that should be good news for US markets. So we could expect maybe a grind higher. Obviously the economic data that's coming out is going to be important, but any signs of weakness does suggest that Fed support is going to be coming thick and fast and won't be taken away anytime soon, which is essentially good for equities. So that ironic situation again where bad news could be good news where stocks are concerned. Now, what about Treasury markets? We saw the short-term end of the Treasury curve get really affected by this political standoff. As you can see here, the Treasury yield has moderated, is back down now below 15 basis points. However, it is still significantly higher than it was after the Fed meeting in September or before the Fed meeting in September when it fell to negative territory. So whether or not we return to that 0 to 0.5 level or prior range will really depend on whether or not cash moves back into the Treasury market and whether or not the markets actually see the Treasury as a risk-free asset. Now, some people may prefer to just keep on the sidelines because they know that the can has just been kicked down the road. But we will have to see. We do certainly expect short-term treasuries to trade in a much less volatile fashion, though, because of this deal. So watch this space. We're still waiting for a lot of economic data, including those non-farm payrolls, which may be released early next week. Okay, everyone, good luck trading today. Thanks very much, and join us again for more. Thank you.